Well, another top story this hour, the Federal Trade Commission has reached an antitrust settlement with the world's largest chipmaker, Intel. Under the terms of the deal, the tech giant cannot use threats, retaliation, or even exclusive deals in order to block customers from going to competitors. The stock is down a little bit today, but what are the long-term implications for Intel? Joining us now is Ashok Kumar, senior tech analyst at Rodman Renshaw. He has Intel as market outperform, and Mr. Kumar formerly held positions at Intel in both engineering and marketing. Welcome to you, Ashok. So is this really a setback for Intel?
It's largely backward looking, and it centers around Intel's actions in intellectual property licensing and pricing. And it has been alleged that Intel used a combination of threats and inducements to influence PC OEM buying decisions. And this settlement, of course, bars Intel from such practices going forward. But investors have largely put this behind. This in combination with AMD settlement with AMD late last year, and the FTC and the European Commission overhang also behind us. I think investors will increasingly focus on the company's fundamentals and the macro environment in which the company operates.
Okay, but I know this went on for 10 years, the strategy of bundling. So did Intel actually make a lot of money doing this?
No, I think it cemented their dominant position in this PC ecosystem. Of course, the company did have advantages in terms of process technology as well as microarchitecture, and a combination of that with some sweetheart deals, for the PC OEMs, cemented their dominant position in this marketplace.
Okay, so let's talk more about your outlook, your evaluation on shares of Intel. Down slightly, as you said. You started to talk about this at all, but has this news influenced you to change your outlook? And how do you view prices? Are they fairly priced, underpriced? What do you think?
One is, I think if you look at Intel's earnings power as it stands today, you're roughly looking at about $45 billion in revenues, for 2010 and $2 in earnings power. And next year, we're looking at about $49 billion in top line and maybe $215 in earnings power. And on a valuation basis, the stock is trading at the lower end of the historical valuation, 10 times forward earnings. But in terms of the next leg up or the opportunity for the company will be in the smartphone segment. And we are optimistic that the company will be able to acquire the intellectual property from Infineon's wireless business, which would essentially position them, for this emerging opportunity in smartphones.
Okay, so will it be a competitive threat like some of the big names right now?
Yes, I think they would have the arsenal to go up against the likes of Qualcomm and, of course, across the pond against ST Micro and eventually against Nokia. But I think this particular acquisition will give Intel arrows in its quiver to go up against their now arch rival, which is Qualcomm.
All right, so one more thing about the FTC settlement here with Intel. So competitors, which competitors do you think might specifically benefit now that Intel can't bundle its products?
I think the landscape has dramatically changed post the settlement with AMD. Intel paid AMD about $1.25 billion late last year to entice them to withdraw all the complaints. Now, in terms of the other players in the PC ecosystem would include NVIDIA. But I think the battle in the PC market has largely been fought and won by Intel. And we don't see this a dramatic benefit for any of the competitors in that ecosystem.
Ashok Kumar, thanks for your time and insights. Ashok is the senior tech analyst with Rodman Renshaw.